In today's show about attractive high yield dividend plays, we're going to a sector that everybody hates right now: oil. Shock horror. But the oil and the energy sector is a sector where we can find high dividend yields and large upsides in the oil and energy stocks, so we can profit twice. Let's get into it. Bull Market Lifestyle presents hot dividend winners for max dividend profits through high yields and high stock upside. Hi, my name is Daniel Helmy. Welcome to Hot Dividend Winners, the show for a different dividend strategy where we focus on high yield dividend stocks that also offer a large upside in gains when the stock price appreciates long term. So we can profit twice. And that makes these type of stocks really attractive. Now, there are a bunch of requirements for these type of stocks and how to find them. One of them is obviously the long-term trend behind it, behind the sector they're active in, has to be positive. The second one is short-term. The sentiment has to be really negative and everybody has to hate these type of stocks. Otherwise, we can't get them really cheap, which means we need the stocks to be cheap so we can get the super high yields. And then when the stocks appreciate and the sector plays out, the growth in the sector plays out, and therefore the fundamentals in the company plays out, and they keep raising their dividends, well, that's when we get the really super high yields. And a sector that fits this to a T right now is the oil and the energy sector. Man, it was the hottest sector in the first quarter after nobody wanted anything to do with it in 2025. And if you follow this channel, you know I talked about, hey, let's get into energy stocks. Don't forget the energy stocks in the fall and the winter of 2025, and we struck gold with that. Now we're back to the terrible sentiment after euphoric sentiment in the first quarter. And this is where things start. This is WTI. Look at this chart of WTI. Today, the oil price right here is only about 10% higher than it was before the Iran war started. That does not make any sense, even if we factor in what we know now, which is the Strait of Hormuz was never as closed as the Iranians wanted the world to believe. And China had built up crazy oil reserves through the shadow transactions with Russia that nobody really knew about. And then they released parts of that into their economy in the market, and that offset the supposed deficit, which was never that high to begin with because the Strait of Hormuz was never closed. Okay, we all know this. We also know that the strategic reserves in the US are low, but remember, and this is a big mistake that you read in the media because people don't do their research, the strategic reserves in the US come from a time when the US was a major oil importer in the world. Now it is one of the biggest exporters of oil. So while you want to have a strategic reserves for geopolitical reasons, economically, you don't need it. You don't need that high of a reserve as you did 40, 50 years ago, even 30 years ago. So the US can be really patient with refilling its reserves slowly over time. Now, other countries can't, and this is where things start to get interesting. And sometimes the markets are really simple. Is the world now only 10% worse in terms of the oil and the energy markets than it was before the Iran war? And I would like to say absolutely not. Absolutely not. the US lost the war. Iran has actually increased its regional power in the Middle East, with the exception of Saudi Arabia and the United Emirates. Numerous oil and gas producing countries will not be able to restart their oil production anytime soon. They shut it down because of the war and the Iran attacks. And it takes quite some time to restart these type of oil fields. You cannot just flip a switch and they're back on. Even in Saudi and in the Emirates, it'll probably take 4 to 6 months to restart the oil production. But at least there it's possible. There are a lot of other places in the Middle East where it's not possible. And we already have an energy crisis in the Asia-Pacific regions, where there the strategic reserves, and by the way, in other areas like Europe, for example, already have been depleted or getting depleted rapidly. And numerous experts say at the latest by the end of the summer, a lot of countries gonna run into serious problems with their strategic reserves, especially in jet fuel and in diesel. So all of this, and oil is only 10% higher. And oh, by the way, the ceasefire didn't hold, surprise, surprise. And oh, by the way, there's still a war going on in the Middle East. I think oil is severely underpriced right now. So that gives us an opportunity to pick up oil and energy stocks on the cheap. And a high dividend stock that I really like from Europe is a Norwegian oil giant called Equinor. So Equinor is a specialist for offshore oil drilling. They're globally active, huge oil company, but the core business is in offshore fields in around Norway. Beautiful country, by the way, if you've been. I was there last year. Wow, incredible. Not sure if it's going to be that great in the winter, but in the summer, definitely worth visiting. Really expensive though. Equinor, offshore oil, and they're rapidly expanding their portfolio for the renewable energies, which I have told you before if you follow this channel. And if you missed these previous videos, hit the subscribe button. That will help you so that doesn't happen again. I told you we have to differentiate between the European and the American oil companies. When we had the ESG movement about 10 years ago, the Americans, their solution to the ESG problem, so to speak, was that they became incredibly cost efficient. They cut costs, they restructured, and they're now as profitable, probably more profitable as far as the margin is concerned than they've ever been in the history. So that's outstanding. I'm a big fan, as you know, of the big US oil companies. The Europeans went a different way. They invested a ton of money in renewable energy, mostly solar and wind. That didn't pay off forever and was not a great strategy for 5 to 10 years. But now things are changing. With the Russia-Ukraine war, with the Iran war, renewable energies around the world, in my opinion, will make a comeback. And that will make the European oil companies, who again profit from higher oil prices, and then also from the renewable energy boom, so they profit from both sides, very attractive. So Equinor has a dividend yield right now at 4.75%. That's super attractive. That's higher than any of the Americans have. They pay out around 2/3 of their profits. And we can look at the chart and we see there could be really interesting buying opportunities coming ahead. Right? We see very much And very clearly, 200-day moving average right here. We got a monster gap fill here. Here we go. There it is. And we can draw the zone basically down here. So that's around another 8% downside potential in the stock. Interesting. In the RSI, we can see we're getting to oversold territory, and we're basically correcting this whole spike here, this wild spike that happened after March. Now, here's the thing that we need to keep in mind, because again, you don't get these super high yield stocks that also offer large upside if there are not some short-term things that we need to keep in mind. And that is, if you invest in an offshore driller, they usually react later in the cycle for the energy stocks because they usually need higher oil prices to be profitable or to make real big profits. So that's why you see Equinor, it did fine, right? It didn't do anything in the fall, and then in the winter it did fine, but then it really exploded in March. Why? Because the oil price exploded in March. Now, do I think that we gonna go back to $100 a barrel in oil? Yes, I do. Do I think we're gonna go higher than $100 a barrel? We will see. There's a real possibility for a massive energy crisis. Not in the US, but in Asia, Asia Pacific, and in continental Europe, which is economically one of the cornerstones of the world, but obviously does not produce much energy at all. Great time to be a German. If this comes true, and we're going to talk about this more on the channel in the coming weeks, and yeah, for sure, maybe even days, because nobody's talking about this. This is the sector that everybody left for that. Everybody's laser focused on gold and silver and what's happening there. Fair enough. But again, we here at Bull Markets Lifestyle, and with our daily show, Hot Trades of the Day, we look at all the sectors and see where we can find bargains. And the oil and the energy market, definitely one of them. So this is one where we might have to be very patient for quite a while. But that's okay. Because again, for us, we get a juicy dividend. And that is what we are in for in the first place. And then, therefore, afterwards, what happens with the stock gains, it's okay for us if it takes a little bit of time. Now, this is a stock that's really easy for the Europeans to buy, depending on your broker. If there's a stock you are interested in, I'm not your financial advisor, it's tricky to buy if you are in North America. Maybe not. I don't know what your broker is. Not my business. So if we talk about the Americans, then the obvious choice is Chevron, which offers a dividend yield of around 4% right now, which is fine. And we're going to make this blue now because this has become support. And is the one with the highest payout among the big oil companies. And as you can see, let me take this off here to make this, clean this up a little bit. This whole breakout that we had here, there we go. Now it's nice and clean. Got retraced. We're fighting with the 200. If we lose the 200 and the support zone, maybe we get a flush sale. That could be in the cards, right? The sentiment is so negative for oil. Why not? And then, if we get a flush sale, that could give us an interesting buying opportunity in Chevron with a higher yield for today. And this is the important part. And that's why it's important. And that's what I'm going to leave you with. With my dividend strategy, I don't invest in deep value because a lot of times you find deep value stocks in sectors that have no growth. And I don't invest in dividend aristocrats that offer really low dividend yields. That's just not interesting for me. I invest in high dividend yield sectors that have the growth story. So the energy sector with increasing energy demand, certainly one of them. Oil is not going to go drop out of the energy mix anytime soon. So that means the oil companies in the future, I expect so with higher oil prices, will earn more money. So they will pay out higher dividends. So my dividend yield on the invested capital will actually go up. So give you an example. I bought Shell, the European oil company, in 2020 when the oil price collapsed. And right now, the dividend yield of Shell is around, I think like 3.5%. But my yield on the invested capital, because I invested back when the share price was beaten down in 2020, is around 12% now. So but that can only happen if the companies continuously can increase their dividends because they are growing, because the sector is growing. I believe the oil sector is such a sector, and therefore the oil stocks are really interesting high dividend plays, and we'll definitely go back to it, especially emerging market energy and oil stocks offer super high upside. We talked about it with Petrobras before. That is it for today. Have a great weekend. We speak on Monday. Bye-bye.